Hi everyone, welcome back to Accountant's Desk. In this video, we will learn about accruals and deferred in the simplest way possible. Even if you are new to accounts, you will understand it easily. And if you need professional bookkeeping services, just fill out the Google form link in the description and we will reach out to you. So let's get started. What is accrued expenses? Expense that is due now but not yet paid. For example, salary due, electricity bill due. Accrued expense means an expense we already owe, but we haven't paid it yet. For example, salary of employees for this month is due, but we will pay it next month. Even though we haven't paid, it still belongs to this month, so we need to record it now. Let's see the journal entries. Accrued expense, also known as outstanding expenses. Example, salary outstanding. At the time when expenses becomes outstanding. The two accounts affected are salary account and outstanding salary account. Salary account, it is nominal account and debit all expenses and losses. And outstanding salary, it is personal account. So credit the giver. And the journal entry is salary account debit to outstanding salary. And the narration is being salary due but not yet paid. This is the journal entry when the salary is outstanding. Let's see the journal entry when we actually pay the salary. Accrued expense, also known as outstanding expenses. Let's take the same example, salary outstanding. When the outstanding salary is actually paid, here the two accounts affected are outstanding salary account and cash account because we pay the cash. Outstanding salary, it's personal account and personal account debit the receiver because liability is settled. And cash account, cash is real account and credit what goes out, cash goes out. And the journal entries, outstanding salary account debit to cash account. Narration is being outstanding salary paid in cash. What is accrued income? Income earned but not yet received in cash. For example, interest earned, rent receivable. Accrued income means we already earned the income but we haven't received the money yet. For example, interest from bank we earned in this month but the bank will pay next month. Since the income belongs to this month, we record it now. Let's see how we'll record the journal entries. Accrued income, that is income earned but not yet received. And the example is interest accrued. At the time when income is earned but not yet received. The two accounts affected are accrued income and interest income. Accrued income, it is personal account, debit the receiver. And interest income, it is nominal account, credit all incomes and gains. And the journal entry is accrued income account debit to interest income account. And the narration is being interest earned but not yet received. Let's see the journal entry when we actually receive the money. Accrued income, income earned but not yet received. Example, interest accrued. When the accrued income is actually received, the two accounts affected are cash account and accrued income account. Cash account, it is real account and debit what comes in. Accrued income, it is personal account, credit the giver, that is asset realized. Journal entry, cash account debit to accrued income account. And the narration is being accrued interest received in cash. What is deferred expense? That is prepaid expense. Expense paid in advance for future benefit. Example, insurance premium paid in advance, rent paid in advance. Deferred expense means we have already paid money but the benefit will come later in the future. For example, if we pay insurance today for the next year, the benefit is for the future, not for today. So we don't treat it as this year's expense. We keep it as an asset until the time comes. Let's see the journal entry. Deferred expenses or prepaid expenses. Example, insurance paid in advance. At the time of payment in advance, the two accounts affected are prepaid insurance and cash account. Prepaid insurance, it is real account and debit what comes in. And cash is real account, credit what goes out. And the journal entry is prepaid insurance account debit to cash account. And the narration is being insurance premium paid in advance. Deferred expenses, prepaid expenses. Example, insurance paid in advance. And when the benefit is actually received in the next period. The two accounts affected are insurance expense to prepaid insurance. Insurance expense, it is nominal account, debit all expenses. Prepaid insurance, it is real account and credit what goes out. And the journal entries, insurance expense debit to prepaid insurance. And the narration is being prepaid insurance transferred to expense. What is deferred income or unearned income? Income received in advance but not yet earned. Example, rent received in advance, subscription received in advance. Deferred income means we have already received money but we haven't earned it yet. For example, we receive advance rent from the tenant for next month. Today it is not our income. It's like a liability. We owe them services. We will treat it as income only when the time comes. Deferred income, unearned income, income received in advance. Example, rent received in advance. At the time when advance rent is received, the two accounts affected are cash account and unearned rent. Cash account, it is real account and debit what comes in. Unearned rent, it is personal account and credit the giver. Here it is liability. And the journal entry is cash account debit to unearned rent account, being rent received in advance. Now let's see the journal entry. We record when we actually earn the income. Deferred income, unearned income, income received in advance. Let's take the same example, rent received in advance. When rent is actually earned, the two accounts affected are unearned rent account debit to rent income. Unearned rent, it is personal account and debit the receiver. Here it is liability cleared. Rent income, it is nominal account and credit all incomes and gains. And the journal entry is unearned rent account debit to rent income account. And the narration is being advance rent transferred to income. Let's recap. Accrued expenses, it is used first and paid later, that is outstanding salary, rent. Accrued income, earn first, receive later, that is rent due but not yet received. Deferred expenses, it is paid first and used later, that is prepaid insurance. And deferred income, receive first and earn later. Example, rent received in advance. That's it for this video. I hope you found it useful. And if you did, please like, share, and subscribe to Accountant's Desk for more accounting lessons. And if you need professional bookkeeping services, just fill out the Google form link in the description and we will connect with you. See you in the next video. Thanks for watching.